I would like to call the LaSalle County Insurance Committee meeting. I'd like to call the LaSalle County Insurance Committee meeting to order, and it's 1 p.m. We will start with taking roll call attendance. Looks like Kathy Wright is not present, or Kendra Pottinger. James Bailey?
Here.
Craig Emmett?
Here.
Doug Stockley?
Here.
Tom Walsh?
Here.
And I am Nancy Urick. Okay, and we don't have anybody that has any citizen comments, so we'll pass on that item. And then I have, there's not anybody on WebEx for remote attendance also, so we'll pass on that item also. Then I'll need a motion to dispense the minutes from the previous meeting.
You want
Yeah.
to dispense or approve?
Dispense.
I move to a dispense then.
Okay, thank you, Doug. And then James also for second, thank you. So that motion, does, all those in favor say aye, please? Okay. Are there anyone opposing? No? Okay, so all ayes, motion carried. Okay, and then next, the Thornton Group will present their report. If you want to go ahead, Mike?
Yes, thank you.
Thank you.
So today's meeting, main purpose was to revisit the markets after our session last, a couple of weeks ago, to negotiate further. As you may recall, in our mid-year meeting, we saw the claims running higher. We did a projection of what the renewal would be, a forecast, and it was coming in forecasted to be about 21.7%. The actual renewal from Blue Cross came back 24.6%. So part of that was a pretty sizable jump in fixed cost. That was driven a lot by stop-loss numbers going up considerably. And we did have a discussion that the general market itself has risen quite rapidly for these renewals this year for a lot of different factors. So when we're looking at this spreadsheet in front of you now, we're going to look at the current column, and I'm going to stop you at 2 points. So the contract features are all basically a duplication of where we're at currently with Blue Cross. That covers the first 3 columns, and then I'll go through the last 2 separately. But in the first column, we're currently paying roughly $965,142 annually for fixed costs, which includes administration. It includes rebates on pharmacy as an offset. It includes the specific stop-loss premiums of $249. That collectively added up to $87,928 per month. We also were riding on a $90,000 wellness implementation credit for this year. So that's how we came up with the 965. Our claims factors, the suggested claims target was $1,781. So when we add that claims factor, which is variable, to the fixed cost, we come up with a bottom line expected of $10,327,339. $10,000,000 rather, $327,339. What that column 2 is going to illustrate is the renewal. And we'll stop at the fixed costs, $916,000 increase, heavily driven by two factors. One, the stop-loss numbers, and we have gotten into the stop-loss pockets pretty heavily this year with some large claims. So that's part of the driver. The rest of the driver is just the market in general. We had a reduction in rebates because of a couple changes in the marketplace. So a lot of our rebates come from, or came from, to this point, from a lot of specialty drugs. A lot of the specialty market is changing in carriers' world with some of the PBMs, the pharmaceutical benefit managers. They are moving more of those specialty drugs to biosimilar drugs, which are a replacement for the biologic drugs. The biosimilar drugs do the same, but they don't carry the rebate factor. You're not going to see them advertised on TV. The ones that are switching to biosimilar, in fact, a lot of them are losing their patent to begin with. And that, therefore, competition's coming in, which is a good thing for the plan and for the member. But what they have reflected here in the second column, the $75 for rebates instead of $105, was a direct impact because of that. We shopped the case to 25 different markets for stop loss or for a direct replacement of Blue Cross. And the best we could come up with were, bottom line came out to the same. The fixed costs were a little bit less. And the only reason they were less is because of an outside PBM that gave higher rebates. When further explored, those rebates were because they were under the old model yet of including the biologic drugs instead of biosimilar. So they were able to get higher rebates, but the plan also cost more, as you could see down in the lower part. It's not reflected in the claim value. It's a higher claim value. It's a higher claim value because they're using the biologics still. They're trying to offset it on the top line with higher rebates. So the most we could negotiate with Blue Cross in taking that back to them, we spoke to the director of Prime Therapeutics, who's in charge of the whole operation, explained the situations. They explained the differences. There would be roughly 66 disruptions, I believe it was, on this plan, if we were to move to the other alternatives with the other carriers. So we didn't think that wise. We went for the largest reduction in fixed costs that we could get. So it's roughly about $250,000 that we were able to cut from this. So our fixed costs, we negotiated rebates back up again. We could not negotiate too much more on that. We couldn't renegotiate anything more. In fact, we got it this morning from our Blue Cross rep who was calling us from 4:30 from Hawaii, but got it finally negotiated down to $362 for stop loss. But again, that's a 45% increase. It's just what, and we are seeing this across the board, I'm sorry to say. In fact, we're seeing it higher. So the market is trying to reset, level set, whatever you want to call it. But our fixed cost increase is going to be roughly $657,000 based on the head count. We did get that $50,000. They weren't going up to $90,000 this year. They started off at zero. So we are taking an increase, though. We're going from $10,330,034 total expected to $12,612,713. questions?
I wish I knew what question to ask. I really don't.
I guess, yeah,
So,
I'm sorry. Yeah, I wish I had better news to report. This has been a very fluid situation in our negotiations in our office, and we took it to the highest levels we could. Yes, sir.
This is based on a deductible of 150. What if we went to 250?
We'll save a little bit, but you're going to pick up a lot more. So what we save on top typically gets factored into the bottom numbers, but it's then a question, is somebody going to hit 250? 250 is probably, quite honestly, the underwriter probably wouldn't get for your size account. It might bring us up to 200, 180, 175. The dollars saved, though, with the large conditions that are going on, or ongoing, rather, is going to wash that. So it's a great question. If the high claimants were, and I was informed as well this morning that the stop loss is still being hit hard. It hasn't reversed. So with that factor, I wouldn't recommend that since they're ongoing.
I was just going to add, we currently have 4 over the 150 and 2 getting closer. And then we look at 24 data and 23 data, there were 10 and 9. So it's, our track record of large claimants, if that were to continue, I think it would eat up all your fixed cost savings for an increase.
Sorry, I didn't have the exact example for you, but we've done that a couple times. It's a great question. And there might be a point where that makes sense, but it's just our history is not showing that right now.
You did do an increase back in 23 to 24. So in 2024, you went from 135 to 150. So it has been something we've looked at and done in the past.
There was a time before that too. We were
Yeah.
at 125.
Probably going along,
Yeah.
yeah.
So we're looking at going to annual cost 1.622 million from 0.965. 965,000 up to 1,622,000.
In fixed costs, you're going, yes, from 965,142 to 1,006,000.
Yeah.
1,622,616, an increase of $657,474. The attachment point is also moved up just because of the cost of claims. So that's that lower number, but that's volatile. It's called an actuarial calculation value. It's what your claims are expected to be, and it's what your premiums, that plus your fixed costs are what your premiums are established by. And there's another, I don't know, is that attached here, Beth, or is that separate handout? Contribution exhibit? So it's the second handout that's going to show you what the premiums will calculate to. So this other handout called contribution modeling. And this is keeping all your plan designs the same, of course. It's basically showing the cost share that would happen based on the newly established premiums based on this increase. So total reflection would be 21.92% increase. Change in employer costs would be roughly $1,410,000. Change in employee costs would be $299,000. of that total number. That's,
Yeah, no, so that first page is, it's broken out between groups who have a certain, these three plan options, and then the next page are for the bargain groups hired after a certain date that don't have the 250 anymore. But then if you flip to the back page, page 4, that's everybody together.
same page. Or same exhibit.
So that is gonna tie out to the spreadsheet. But what's different on this contribution workbook is we have a HSA seed in the contribution workbook of 94,000. So if you took that out of the numbers, and you took the 50,000 credit out of these numbers, then the two bottom lines would match. That one-time credit, the 50,000, is not factored into the contribution workbook. And it typically is not. It's usually something that's a credit to the claims fund to offset future risk.
And to be used for different things, wellness,
Right.
administration, stuff like that, but that would be a credit on your bill. But those numbers all add up then to the bottom of the third column in the other exhibit. The total expected, roughly, it's gonna be either the 12,600,000. I'm back on the other exhibit now. So, very bottom of page 3. I'm sorry, the third column. Yeah, it is page 3 in the other exhibit. Closely gonna resemble that 12 million of the other exhibit. The two should tie out pretty close. They might be off a little bit in some rounding and HSAC that Beth mentioned.
Right.
So the employee portion can go up $113 and 10 cents?
Well, it depends on each tier.
Yeah,
Each tier is different.
Well, I'm just looking at page 3, the premium from 362 to 249. I mean, just overall average. Is that right?
Which page are you looking at?
Page 3?
which exhibit? So the first exhibit.
The one that has the premiums on it.
Well,
Oh, no,
Now, this is the one that the employees will be charged off of.
it's based on each plan, because the percent breakouts are different on the tiers too. So at the very top of those pages is where the difference is between 1/1/2025 and 1/1/2026, the premium rates. So those are totals. So it's an 80-20 split, and then down in the middle is where you see that difference of the 20% is 15 and 10, because that's good. So it looks like the single and the family are going up a bit higher than the two middle tiers. They're going up about $100 a piece, and the other ones are, well, the single's going up by what, 50?
5158. I'm just doing the math.
Family is going up about
But, yeah,
Beth, is that a bi-weekly or a monthly?
162 monthly.
Monthly.
Yeah. The family PPO 250 is 162.46 a month. The other two tiers are right around $100 a month. $1,500 PPO single is going up about $35 a month. I apologize. Normally we have the math done on this. $73. currently for the 1,500 is going up 110. The total the employer's paying, is that what you're saying? I'll do the math on this. 21.9, 22%.
We should match overall to what we're looking at on the other chart.
So the,
That's a 22% increase
yeah.
overall anyway, so.
on the regular spreadsheet to the contribution workbook, we sometimes have some variances with that percentage, and it has to do with participation and shifts throughout the year. But yeah, we're very close, right around 22%.
And keep in mind the claims factors that you're looking at on the original exhibit, those are not set in stone. You're not charged those claim factors. So the other exhibit, the original exhibit, where we saw the fixed costs and then the claims, average claim value, that is a floating number. That is based purely on a projection based on the underwriter's calculations of how your plan's been running, and what the increase is on the fixed costs. But you're not charged that. The only thing you're charged are the fixed costs on a monthly basis.
Did you say the fixed cost on a monthly basis?
Yeah, the fixed cost would be on your monthly bill for the stop loss. The rebate credit would also be on there. That's a monthly thing. So all the pluses and minuses would be on a monthly basis on the fixed cost section. It's just the claims are what comes in based on how people claim. And again, they're capped at any one individual, 150,000, to protect you and the plan and the whole thing.
So before you were mentioning, we have over 60 that are over 150,000, is that?
We have six people over 150 right now,
There's 4, but two others scattered people.
but the size that they are over, the first,
Right now, they're over by 455,000. That's how much carrier reimbursement we receive through,
that's the first 7 months. Right,
Yeah.
okay. And the largest claim is pretty large. Okay. But these are all ongoing situations, so they're very likely to hit 150,000 next year, on at least those 4. The other 2 coming up are probably more volatile, probably be under that. But
And I have the report from last month, or 2 weeks ago, if you need a copy of it, if you don't have it for whatever reason, that we don't have updated data yet, that will come 2 weeks from now. But if you wanted to see that detail, I can give you a fresh printout. Last year, the carrier reimbursement was $1 million on large claims. So we've definitely gotten into the stop loss pocket. And historically, when we look at it, over the last 5 years, we've paid about $4.8 million in premium for that protection, but received $6.1 million in reimbursement. So that's playing a part in that 50% increase.
45.
Yeah, sorry. Good work, Mike.
Yeah, it's, there's no good news to kind of point to, other than this is we've been doing a lot of these renewals, and this is on par with everyone. And again, it's, your high claims are one thing, but the biggest piece that's driving the claim factors and the stop loss is just the high risk of the complexity of claims that are out there in the public. It's off the charts. And something needs to happen to change that, but I couldn't tell you what. Yes, sir.
You said Aetna is pending? So we haven't received anything from them yet, or?
Did not. It's not a good indication, but we can make a phone call beforehand, see if that's even coming.
Yeah, I think they've missed the deadline by easily a month by now, so I don't think they're interested.
That was probably from the last time we updated this.
Yeah.
So they're picky. Nobody's buying the market. As you can see, even the stop loss from, so the last two columns to the right were the alternative. It didn't allow a lot of negotiations other than the rebates. Some of the administration costs is a little bit lower, but then there's a factor of other TPA services that goes into it. So apples to apples on fixed cost, one of them were about $100,000 apart on, the other one about 200. But their lower bottom number, it would be disruption of changing to United Healthcare, a different administrator, with the potential to save $100,000 or 200 of fixed costs, but potential of claims being higher because their discount power is not as high as Blue Cross. The network that they have, although very good and serving a lot of our customers, Blue Cross's network discounts are greater, which impacts your claim cost.
The other dynamic these markets can do is they want one more month of data for one thing to firm their numbers up. So they need, that data will come out like midweek next week. It'll take them about a week to look over it. But what these markets can do or usually do is when they see a large claim scenario that's ongoing, they'll set a laser on that individual. So instead of that particular situation being $150,000 risk for the county, it's $300,000 or $400,000. So in the end, it makes the numbers all can make them lopsided. And I think there's some concern there with these ongoing situations.
So this way in the future, for next year's plans considerations, it's about how do we get at lower cost of care? And it doesn't necessarily mean put everybody on a healthy diet. It means that getting at the root cause of the provider and the better providers and the better outcomes and things like that. And although your folks are very diligent in using the PPO network and the in-network doctors and providers, it's within those lists that there are better doctors and providers. And it's how do we help people find them? So that's the next quest of where health insurance is going. How do I control cost? It's trying to control that outcome. And that's where we started to talk about Garner and Blue Choice options and things like that in previous meetings that I believe we will be continuing with that conversation, but not for this January. Did you need a vote on this or hold off to the end of our? conversations.
The committee can choose if you want to do each one as we go through it, or do you want to wait, go through everything, and then do we have
Do you want
four
to go
that we're
through
going to have to
everything and
do.
then we'll,
That's
That's
fine.
up,
Yeah.
that's up to the committee.
yeah.
Yeah, there's about 4 items for us to discuss today. So this is one. The other one that we talked about last time was the retiree carve-out, having troubles as well. This went up considerably the year before, but even with the increase the year before, so this is in the same packet as the first one that says marketing spreadsheet. Page 6. Which is one after page 5. Page 6 might not be listed, or might not be, I'm sorry. Let's start on page 5. So page 5, first of all, Benestar is an administrator that handles a lot of service. So this is, oh, it is page 6. Why did I look? I'm sorry.
That's okay.
I stand corrected. Page 6, Benestar has been with the group for a very long time, starting off with the original carve-out using Hartford as the insurance company backing the service of retiree carve-out. We made a switch along the ways to Blue Cross with a very competitive offer. In fact, so competitive that number was lower than what we were paying with Hartford for about 4 years, 5 years. Even after taking a 40% increase last year, that number was still competitive where we started. Doesn't mean it's right, but they are looking to add another 49% increase this year from Blue Cross. The Medicare Advantage market has taken a lot of criticism recently, but more so about the pricing. And their pricing has skyrocketed for a combination of factors, everything that we talked about, what's going on in healthcare, but then also Medicare Advantage is reimbursed by the federal government. That changed last year. The plan design changed last year to include a cap on the way they do prescriptions. So people were hitting the maximum much faster. Consequently, putting a 49.85% increase on this year. So last year, we were at 402.40 combined premium of medical and RX. Same plan design this year would cost 603. We had mentioned last time we had an offer from Humana, which will operate very similarly. I'll have Beth come up and explain that. But we're all in at $424 premium rate. It would still be Benestar, but it would be using Humana. I was looking for the page number there, I didn't see. Sorry.
Who's ESI?
Express Scripts. So ESI stands for Express Scripts. So page 6 shows you the cost analysis, and when we were here last, 2 weeks ago, we had a comparison on plan design, and we wanted to do a little bit of a deeper dive before you were going to vote on this, to make sure that we were seeing apples to apples between the Blue Cross quote and the Humana quote, and Express Scripts. And so the next page that doesn't have a number, but it is page 7, that one, the column is Blue Cross right in the middle. That's what you have today. And then Humana is over to the right. This page just looks at the medical benefits associated with this carve-out program. And as you go down, everything is the same, or in a couple of situations where it's noted in red, it actually is an enhancement with Humana. And then where the color changes and you get into like a gray and a purplish color, when we went to a Medicare Advantage program, the retirees were able to pick up some additional benefits for dental and vision, which they really appreciate. And those will continue under Humana at the same capacity as Blue Cross. A lot of times people are like, well, what's the network? What's the network? Is the network the same? What you have to realize with these programs is there really isn't a network. The network is Medicare. So if the provider accepts Medicare reimbursements and Medicare payments, they're in the network. And historically, we haven't really been told or heard of any provider that doesn't accept Medicare reimbursements. So from that standpoint, there isn't a disruption for seniors, and Humana is very strong in this market. In fact, it's one of their most, it's their main focus for business. They've completely left the group insurance market to focus on this, and then also some ancillary coverage like dental and disability. So they're not in the active population insurance market anymore, just Medicare business. And then if you flip to the next page, we have a deeper dive comparison on the pharmacy. So between Blue Cross today and then Express Scripts going forward. So again, it's actually an enhancement with Express Scripts because right now Blue Cross has like 2 copay levels between their standard and preferred networks. This is just dropping it down to the preferred network at the same preferred copay level. And then earlier, Mike was alluding to some of the enhancements that came through Medicare Advantage a year ago. And that's up at the top where it says catastrophic true out-of-pocket maximum. So when we talk about out-of-pocket maximums on traditional insurance, it's the amount of money a member has to pay before they reach 100%. This is different. This is the amount of money in general their prescription costs have to reach before they get to 100%. So this is counting not just what they pay, but what is also paid by Humana or Blue Cross or Express Scripts. So if someone's on a very expensive specialty medicine that is, $3,000 a month, the first time they fill that medication, they get the max out of pocket, even though they maybe only paid $43 for it. In the past, it didn't work that way, and these out-of-pocket maximums were like $8,000. So all of that has really created a lot of volatility, and then the way that the providers are reimbursed.
And if I could add, only the $43 would count towards the max out-of-pocket in previous years,
That's right.
not the full true.
Not the full cost
cost.
of the medicine, right? So, after going through this deeper analysis, we recommend the switch to Humana and Express Scripts, keeping Benistar is key because that's the piece, the folks that communicate with your retirees. Any questions that come up, they can reach out to them. We have other public sector clients with Humana for this carve-out program and has historically run very well. So we don't see any worry or concern there. Initially, I think when you push that communication out, there will be some concern because, right, everybody knows the Blue Cross name, but in this world, it really is a very different animal, and it's they compare very well. And historically on our renewals, Humana has been less volatile. They've been more consistent with a fair renewal year after year. So we hope that that continues in that area. Any questions?
So you're recommending going with Humana then?
Yes, Humana and Express Scripts. I think that is it for our portion of the presentation. And then there's items you will need to vote on, but I want to give you time to digest and see if there's any other questions before you get that far.
You know, you were talking about the network. Oh, sorry. You don't have anything else. With this anyways. When we went to the Medicare Advantage plan, I know that there were some disruption issues with providers in Morris Hospital System. I thought that we built into that particular plan an all-access component. But you're telling me now that's not an issue?
You know what, you have a good memory, Julie.
Talk to retirees about providers, so.
Both networks are called a passive, I'm trying to think of the term they gave me, like an open access type arrangement. So, yeah, right. And so the thing with Morris, if I remember back when we made that Med Advantage switch, they still accept Medicare reimbursement and Medicare payment, but there was a reason why they weren't, it fell underneath this like overlay piece that gives you access to any provider. So it has the same capacity, and I think I probably have it written down in my notes over there what the term is, but I think it's called like a passive open access network.
So if they don't accept Medicare, they can still go there? Okay.
Right, well, and it's not that they really do accept Medicare, they just don't have some sort of a specific contract.
Okay.
They still accept Medicare reimbursement, and that's what we found with
Okay.
Morris. There was like an internal reason why they weren't showing up like other providers were
Okay.
with Medicare.
Thank you.
Any other questions?
Pat, you want to review the pharmacy copays though? Wasn't there an enhancement on that? That there's no two tiers?
Yeah, right. So currently under Blue Cross, there's a standard tier and then a preferred tier. So if, yeah, it's, that was page 8, if there were a number. So the standard tier looks at the pharmacy network and says, if you're going to one of those providers, it's going to fall under one of these tiers. So they'd be paying like $5 for medication, whereas under the preferred arrangement, they pay 0 today for like a generic. So it's 0, 5, 16, 25, 41.50. You can kind of see the numbers on there. With Express Scripts, it's all preferred tier. They don't have that nested benefit. They all have the same, utilization management provisions. So, step therapy, quantity level limits, prior authorization, both have the same features on the plan. So we wanted to just make sure, like, okay, we're going to Express Scripts potentially. Do they do like a step therapy program or require prior authorization that might not be done currently? And that's not the case either. They're the same there.
Thanks, Beth and Mike, for your presentation. Appreciate it. All right. So I'm going to need a motion to approve the health insurance administrator and purchase of individual stop-loss coverage for January 1st, 2026, and forward the resolutions to the full board meeting.
And I'll just comment that will be Blue Cross Blue Shield, and it'll stay the 150 as the stop loss, 150,000, as it currently is. It is a resolution, though, that you'll need to sign when you come in 2 weeks from now. I'll have it ready for you, but it's one of the standard ones that you approve.
Okay, thank you. Greg, Craig, can I have another motion to? Can I have another motion to approve?
Who was the first? Did somebody make a first on that?
He
did.
was the first,
So you need a second.
yes. Okay, thank you, Doug. Okay.
And I would probably, do we roll call these?
Oh, we do?
I would suggest you roll call each item
Oh,
because we're
okay.
spending money on every plan.
Okay,
that
I
we-
didn't think we were
everything
doing
that
it
we have to
today, so.
do. Everything we do today, you probably should roll call.
Okay. Okay, let's see, okay, so we'll have a roll call then. So Kathy's not here, or Kendra. James? Haley?
Aye.
Okay. Craig?
Aye.
Dunn? Doug Stockley?
Aye.
Tom?
Aye.
And I will too, Nancy Yerrick. Approve. Okay. And then we'll go to the second one then, so we'll go to motion to approve the health insurance plans. And that will be
That'll be the renewal of the Blue Cross Blue Shield for active employees. Yes, so in essence, it's, on this page, it's your yellow. And then this packet correlates to it. More premiums by tiers. Your resolution that you sign will have those components with it, and you'll be able to double check those before you sign it, but that's what it's covering.
Craig, first, yes.
Second.
Okay, thank you. Thank you, Doug. Okay. And, do I have to have then we'll just do a roll call. Okay, so, James?
Aye.
Craig?
Aye.
Doug?
Aye.
Tom?
Aye.
And I'm also an aye, Nancy Yerrick. Okay. All right, so then next we'll go to the third. Can I have a motion to approve the COBRA rates of all Medicare plans for January 2026 and for the resolution to the full board. James?
Aye.
Craig Emmett,
Aye.
Doug Stockley,
Aye.
Tom Walsh,
Aye.
and Nancy Yerrick. I'm aye also. Okay. All right, so then we'll go to the next resolution. Can I have a motion to approve the health insurance provider and plan for the retirees? And that will be
Humana and Express Scripts.
Okay.
And
Okay,
I will
James?
have that chart with rates.
And
with the
Doug,
resolution.
thank you. Okay, and we'll have a roll call. Yes?
Is that Express Scripts, is that gonna change anything as far as, local pharmacies are concerned?
That's a great question. Express Scripts is one of the top three PBMs. They have about 60,000 pharmacies, so everything should be intact on that. Yeah.
Okay, so we'll do a roll call. So.
I'm sorry, who was the motion? Did we motion this one?
We did? Yeah, we did,
James is the first, and who was the second?
Doug.
Doug. All right, so we'll perform a roll call. James Bailey,
Aye.
Craig Emmett,
Aye.
Doug Stockley,
Aye.
Tom Walsh,
Aye.
and I for Nancy Yerrick too. Okay, and that's gonna also be for the January 6th forward to the full board meeting. So we have all the 4 items, okay. Can I have a motion to adjourn? Does anybody have any other questions or concerns?
So this will go to the next full board?
Yes, at your monthly meeting in 2 weeks, I'll have all the resolutions ready for you with what the attachments, exhibits will look like, and that will all then go to everybody at the full board, but you'll sign your signature page in 2 weeks. And then I'll have you approve the budgets for me at that same meeting too. That's why we're here today. And then the full board on October 9th,
8th, I think, I'm not sure.
8th. That's the full board meeting where all of this will be, including the vision and the health joy that you approved at the monthly meeting 2 weeks ago.
Any other questions? No? Okay. Can I have a motion to adjourn?
Oh, It's a
Okay.
ninth.
What? Oh, Craig, okay. And Doug, thank you. All those in favor respond by saying aye. Okay. Any opposed by saying nay? All ayes, motion carried. Okay, and then, our next committee meeting will be on, September 25th at, 9:30. We're still having that, right? Yep. All right, and it'll be in this room. So we'll see y'all guys then.
Well, they're gonna give you what the break, they have a spreadsheet that gives you a breakdown of what the employee, like, I mean, I know it's in the chart here, but, I mean, yeah, I mean, we talked today, an average of like the single is about 50, 100 for this employee, spouse, employee, and child, and then the family tier is at least 100, 140.